Today I'm going to be going through ACCN3 June 17 question 1 and this is a question on incomplete records. So the question's on Veary. If you've had a read of the scenario, what you'll find out is there's a partially completed income statement, okay, and there's additional information, points 1 to 6. So what I'll be talking you through is a step-by-step process on how to tackle this question. Once it gets working. So, looking at the question, there's the sales are missing, cost of sales. There's 3 parts, 3 bits of information to that. Closing stock is missing, and purchase is missing, and we have gross profit. So there's no sales. Cost of sales is incomplete, but we do have gross profit. Okay, so that's probably the starting point for the question. Looking at points 1 to 6 in additional information, point number 5 mentions about gross profit markup. Okay, so if you have gross profit and you know the percentage of profit that the business is making, you can then work out cost of sales and sales from this. Okay, so the first step would be to work out what is the sales figure, what is the cost of sales figure, and you can do that from gross profit. Obviously, you need to understand how gross profit markup works. So the first thing I'm probably going to explain is obviously gross markup is when a business wants to make profit. So for example, they buy something and then they'll add on 20%, and that 20% is their profit, and then they will have a selling price. So markup is always on top of cost. Okay, and the way I look at it is cost is always 100%. Your profit is what you want to make in percentage wise, that will be on top, and add the two together and you get your selling price. So cost 100%, profit in this scenario is 25%, add the two together and you get 125%. So we know gross profit is 25%, and we need to use that to convert that and find out a sales figure and a cost of sales figure. So in terms of calculation, 112,000 divided by 25, and we times that by 100, i.e. 100%, and we times it by 125%. And the reason why we're doing that is because we know gross profit is 25% in value, we know costs is 100% in value, and we know sales revenue is 125% in value. So all we're doing is using the gross profit figure, dividing it by 25%, and timesing it by 100, and timesing it by 125 to work out the two missing figures, sales and cost of sales. Okay, so like I mentioned, with this particular point number 5 markup, it is a percentage on top of your cost to achieve a specific selling price. Okay, that is different to margin, and hopefully I'll cover that in another question. So once you've worked out sales and cost of sales, so on the left hand side you've got revenue, which we have. You've got 448 workings 2, which is your cost of sales, which we've worked out, and we have 112, which is gross profit. So we have those 3 figures so far. The second step, in my opinion, would be to work out closing inventory. Okay, the reason for that is you could go straight on to purchases, but there's not enough information about it. Again, if you look at the question with incomplete records, there's always, it's a bit like a jigsaw. Okay, first you figure out what the first piece is, then you move to the second, and in this scenario, gross profit markup was, point number 5 was the first piece of the jigsaw. The second piece of the jigsaw is point number 6. Use the ratios. Okay, they are most likely the first things that you will need to use in these kind of questions. So the second step would be point number 6. Use the inventory turnover. Okay, so quick recap on inventory turnover. So the formula is on the left hand side: cost of sales over average inventory. Average inventory itself is made up of opening stock plus closing stock, and you divide them by 2, and that gives you the average of inventory that the business has held during that period of time. Now, what we know from the question is we know cost of sales. We've worked it out, 448,000. Okay, 448,000. Now, if you divide that by x, we don't know what x is, but if you divide it by x, we know the outcome is 10 times because they've told us that in the question, 0.6. So 448,000 divided by x equals 10. Okay, and if you want to work out x, divide the top 448,000 by 10, and that will give you the average inventory. Okay, that is the missing figure. But we're not done just yet. Okay, because what we're trying to work out is what is closing inventory. Okay, that is the objective of step 2. Now, if you know what average inventory is, 44,800, you double it. Okay, you times by 2. And the reason why I say that is because before you would have done opening plus closing divided by 2. Now we're going to work backwards. So we're going to times the average inventory. We times it by 2. Okay, and then you take away the opening stock. So 44,800 times by 2, double it. We're working backwards here. Gives you 89,600. Using the 89,600, you take the 39,780 away. Okay, so what we're doing here is we're saying average inventory is 89,600. Now we know one of them, opening, is 39,780, which means if we take that away, what will be left over is the closing inventory. Okay, so the answer is correct. 49,820 is the closing inventory. And if you are getting a bit confused by this, the best thing to do is work forward. Okay, so something like opening stock. Let's see if it works. Okay, so opening stock is 39,780. You put this into your calculator. 39,780 plus 49,820 equals 89,600. Divide it by 2 gives us 44,800. That gives you the average inventory. And if you do 448,000 over 44,800, it will give you 10 times. Okay, so with these kind of questions, don't rush into them. Work backwards. Okay, rearrange the formula however you see fit. Work backwards. Once you have your answer, you must check your answer. Okay, make sure it all adds up together. Okay, so step 1 was sales, cost of sales, and we calculated them using gross profit. The second step would be to work out closing inventory, and the reason why we can't go for purchases straight away is because we just don't have enough information about that. Okay, so there we have the mark scheme, revenue, cost of sales, gross profit, all complete, and now we have closing inventory as well, and 3 marks there for that. Okay, step number 3 is the only item that is missing is purchases. Okay, so we worked everything else out. Purchases is the last one left, and for this you just got to work backwards. Okay, it's pretty straightforward. Just working backwards, basic math here. So we use cost of sales 448, and what you would normally do in terms of cost of sales, opening stock plus purchases minus purchase returns minus goods for own use minus closing inventory. We are just working back here. So we start off with cost of sales 448, and what we would minus we add, and what we would add we minus. 448,000 plus 49,820 plus 9,000 plus 16,720, and then we minus 39,780. We're minusing it because we would normally add. Okay, so we're doing the opposite here, and that will give you 483760. Okay, I've seen a lot of students make this mistake. They'll do a quick calculation, they'll put the figure in as purchases, and they then move on to the next question. Check your answer. Okay, does it all add up? So if you were to add opening stock plus purchases minus purchase returns minus goods for own use minus closing inventory, does it still get you the same 448,000? If it doesn't, you need to go back again. Okay, and if it does, everything is all good. Same for revenue, 560 minus 448. Does it give you 112? These basic calculations, they've got to be done. Okay, otherwise silly marks are lost. And there you have it. That's step number 3 for part 1 to this question. The next question, if I just scroll down here, the next question, what they want you to do is they want you to work out trade receivables, trade payables, 4 marks. Okay, so T accounts is really the best way forward. Okay, let's just see what information we have. Oops. Let's just move that along. Okay, so best way is a T account. That's what the mark scheme has done. If there's a letter G, that refers to information given in the scenario. So we've got balance brought down on the debit side. We've got receipts on the credit side. You've got sales. Sales has come from the income statement that we worked out. So you've got total sales minus cash equals credit sales. Trade receivables is a credit account. We only need to be concerned about those sales that are on credit. So we have total sales in the income statement minus cash gives us credit sales, and then you balance off the account. So this is pretty straightforward. Again, you need to know control accounts, what typically goes in and on which side. Okay, so balance brought down is given, receipts is given. The only thing you have to calculate here is sales. Don't put the whole £560,000 in. Only put what is relevant on a credit basis. Cash sales do not go in to a trade receivables account. Okay, they are cash, they are not credit. Likewise, trade payables is going to be very similar. You've got the balance brought down, G for given, it's given in the scenario, 19,400, it's point number 3, it's given there. We have payments, point number 2, it's given to us there. The returns, obviously we don't know what these returns are. Okay, we don't know if they're cash or credit. However, in the scenario they've mentioned, point number 4, all returns are to do with credit transactions, so they need to go into the T account. So you've got your balance brought down, you have your payments, which is given, you've got your returns, they reduce the value of the trade payables. Purchases, same for trade receivables. We have purchases which we worked out, 483,760, so we worked it out earlier, and we have cash purchases. Okay, so using the credit purchases, using the total purchases figure, take the cash away, and that leaves you with your credit purchases figure. Okay, balance off the account, and there you have the carried down there for you. So hopefully that's been of some use. And just, to recap, as I mentioned previously, with these kind of questions, typically they start with either control accounts. You've got to put a control account together to work out key figures, or you've got to use ratios for these style questions. And I think once you get the first piece of the jigsaw, the rest of it should all fall into place. And the financial position, pretty straightforward. You've just got to do some T accounts, put things into the right place. And there you have it. There is part C to question 1, which is a written question, but I won't be going through that because it should be fairly straightforward for you all. And thank you for listening.